Welcome to the Aramir Roundtable. Today is the 30th of January 2019, and we have our guest Scott is going to show us the TLT Elephant. So welcome, Scott. First time you've been on the Roundtable. Nice to have you.
Yep. Thanks, Tom. Appreciate being here. Look forward to it.
Okay, and if you could just go to slide number 2. Since you have, there you go. Okay, so just a normal disclosure, the Aramir Corporation is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. Options involve risk and are not suitable for all investors. Past performance is not indicative of future results. And if you'd like to read the whole disclosure, just pause the video or go to the bottom of any of our web pages. So with that, Scott, I'm going to mute myself just so there's no background noise disturbing you, but I'll be here, and if there's any questions, I'll let you know.
Okay, sounds good.
All right, thanks.
All right, everyone. Just a quick overview here for those that are unfamiliar with who I am. I've been trading options professionally about 8, 9 years now. Started with a prop firm that focused solely on options, back in 2010. Prior to that was in the corporate world for about 20 years. In the mortgage industry, both retail, wholesale. So I was exposed constantly to treasury bonds and how they move, what affects them from technical and fundamental technical and fundamental reasons, based on working with rate lock desks and all that kind of thing on a daily basis. So really learned a lot about what influences the treasury market and what makes it move. So because of that background, I focus quite a bit on trading TLT, which is the iShares 20+ year treasury bond ETF. It really just mimics the 30-year bond. And you can really look at that on a daily basis. If you see a 5 basis point move on the 30-year treasury, TLT is going to move about $1, almost to the penny. The trade here that we're working with, the TLT Elephant, and you'll see why I named it the Elephant, just because, like other trades, it's what the P&L projection looks like. It's essentially created with a longer dated debit call spread, and we're selling shorter dated iron condors against that spread. And the shorter dated iron condors are typically sold 2 weeks out. If IV is higher in TLT, we can sell them 1 week out and get enough premium. Now, and we'll touch on this later in the presentation. This is a very commission-intensive trade. We're doing tons of legs here. Okay, so tons of iron condors, some high contract level in the debit spread, selling simple, put and call spreads, etc. Iron flies at times. So there's a ton of contracts out there, and we're closing them. We're buying any of the shorts back before expiration. So commissions will play a major factor if you're with the wrong broker. So we'll talk about that at the end. So the objective really is to make money through theta on a weekly to bi-weekly basis, and we're controlling everything by adding in that debit spread. So when we look at the delta at initiation, you see it's really flat, and this is especially flat. If you look at that, you may not, be overly impressed if that's on SPY or, some type of equity underlying. But the fact that we have a delta that's this flat and a P&L line that's this flat on the 30-year bond is phenomenal, right? So that's how we start with the trade. The trade gets scaled into pretty much each day. I will scale in. I want to scale in because we take advantage of the gyrations in the 30-year treasury. A typical day is a 2 to 3 basis point move. That equates to about 60 cents on TLT, which is what its standard deviation is on the daily standard deviation. So we've got, and it tends to grind around. So, standard deviation in one direction for 2 days and then back the other direction for 1 day, et cetera. So we have a grinding underlying here that tends to trade in very defined ranges, and we know a lot of things that influence those ranges. where it's gonna trade within those ranges. From our background or my background here in the mortgage industry, so we would scale in each day and build our premium, build our theta, and then you can see here's the elephant, where we get the name the elephant. Now the reason for this, this is imperative, this is critical to this trade. When TLT moves sharply in one direction, meaning the 30-year Treasury is moving sharply in one direction, it's almost always, especially in a period like this, we have low inflation, it's almost always with yield down, price up in the U.S. Treasury. And that's a flight to quality bid. It's that simple. When we have panic, when we have things that are going off the rails, when something really bad, a September 11th type thing happens overnight, U.S. Treasuries will rally massively and TLT will rally massively. So that's our black swan fear, right? We wake up one day and one of those things happens. So as you can see, if we were to wake up one day and this thing were to go through the roof, we are covered. As you can see, we actually start to make money as TLT rips. So that's there for our black swan bailout. We really are just delta neutral on TLT. That's it. We don't think that TLT is going to do much for the next 12 to 24 months at a minimum. We have a Fed that has completely capitulated to the markets, has gotten completely dovish. We have no Fed hikes priced in for 2019. It's a coin flip whether the next move is going to be a cut or a hike of 25 basis points, and that probably happens in 2020. So we have no pressure from the Fed from the underneath. The yield curve is extremely, extremely flat. So there's no room, major room for yields to drop. There's just no reason for them to go much higher. Inflation is in check. The Fed is on hold. So we've got a really good setup here for a delta neutral trade that has a black swan bailout if the unthinkable happens. And we just scale in and scale out pretty much daily to really just kind of trap that theta. So that's where we stand for the trade itself. And one other thing too, what's important about this trade is the debit spread helps to keep everything in check as far as the Greeks, right? Everything is flat into the end, as flat as it can be, especially Vega. The fact that we have neutral Vega is great on, when we're net premium sellers. The last thing we want to do is see massive ID pop right before expiration, near expiration, meaning we can't buy anything back because we're so Vega negative that we got cremated, and we have to wait closer to expiration to buy back short contracts. We don't want to do that. So we're not going to be handcuffed like that because our Vega is neutral. So regardless of what IV does, because of that longer dated debit spread, we're able to hold neutral Vega. And the delta and gamma is great as well, as you can see around the money, and we have a chance to adjust. As you can see here, this is only 5,800 in margin being utilized for this trade. We're basing it on a $10,000 model portfolio. Typically, it'll be scaled up to probably about $7,000 to $8,000, and we hold a couple thousand in reserve just in case the unthinkable happens and we need to buy back a short strike near the money. So if the unthinkable happened and I were to buy back my short calls, I would really just eliminate, the elephant's trunk essentially would go straight up if we had something like that happen. I'm not worried about the downside. I can control the downside. It's very easy for me to feed negative delta because when TLT moves lower in this type of, environment that I described before, it grinds lower. So, it'll probably grind. If we're going to go lower and head the other part of the range, which I do think we're going to do here over the next, from a seasonality standpoint, over the next couple of months, we're likely to do that. But we'll chop down. This is a 2-week trade. I expect it to chop down over the next 2-3 months. So we have plenty of control during that time. That big fall off, while it would be a really bad thing if that was, a stock, and things are selling off rapidly, well, that's not how it goes. When equities sell off, treasuries rally, and when treasuries rally, TLT goes up. Other time, TLT is basically grinding around sideways or drifting lower, which we can control. Okay, so now let's get to the part about contracts here. This trade flat out, if you're trading, you can't trade this, or you can, but you'll lose money. If you trade this trade with a broker, an IB, a toss, or whatever that's going to charge you 50 cents to 70 cents a contract, you're not going to make money. Okay, it's not going to happen. So I've worked very closely with Tradier and TraderHawk, which is the trading platform. Tradier, for those that don't know, is a brokerage that's basically a fintech brokerage API that allows outside software vendors to plug into their API, and they act as the broker. Apex is their custodian, clearing agent. So, you know, Apex is huge; it's been around forever. So, in my choice is to use TraderHawk as my front end platform to plug into Tradier. I've worked with the two of them to create this offering. So we have those that are trading any contract. This TLT Elephant will do about 1,000 minimum contracts a month, just trading a 10,000 allotment. So like a one lot is going to do 1,000. So if you're trading three lots, $30,000 portfolio, you're going to hit that contract above 3,000 alone with this trade, let alone any other trades you're doing. So that would qualify you for the free platform. Less than 3,000, the platform fee is $119 a month. And they review the account each month to make sure that 3,000 is hit. If it is for that month, they rebate back the $119. The pass-through is 9 cents a contract for the non-index options. So TLT, it's 9 cents a contract. There's no commissions from Tradier. That is a pass-through rate of the SEC fees, OCC fees, exchange fees. So that true fee charge is passed through from Tradier to the client. So we're paying 9 cents a contract is the bottom line to open and close. If it's a index option, it's 35 cents a contract to open and close, which is obviously still very, very, very good. But the 9 cents is what we're focused on. And the first question that people get is, well, how can they do this? Something's going on. Too good to be true. It's not too good to be true. This is not a dirty little secret in broker-dealer world. It's a little secret. It always was until these firms came along. Brokers get paid for order flow. It's just that simple, right? So all brokers, IB, TOS, everybody gets paid by the exchange for order flow. It's called rebate for order flow. So the front-end broker sends to, in many cases, their clearing agent. In this case, it's Apex, who sends to a market maker, who sends to the exchange. The exchange gives a rebate back to the market maker. The market maker gives a piece of that back to the clearing firm, Apex, and Apex gives a piece of that back to the introducing broker, Tradier. So you do a lot of volume, they get a little bit of rebate back, and that's how they make money. So all brokers do it. All brokers get it. They don't like to talk about it because that's how they justify their per contract commissions. 50 cents a contract, et cetera. That's just pure profit for them. They're getting rebate for order flow. So that's that. This is what the platform looks like. Really robust platform. I love it. Super ease of use. And they will do webinars. One thing that's cool is you can set up a paper trading account with them before even taking the step of opening the Tradier brokerage account. So if you just want to test it out, you can just go get a free paper trading account for 60 days. The gentleman Lex, who is one of the co-owners at TraderHawk, will give you a platform demo and walkthrough. Take you through to show you how to do everything, and then you can paper trade if you like for up to 60 days before even opening the Tradier account. So that's pretty cool. And again, this is the players. So TraderHawk is the trading platform front end. Tradier is the introducing broker, and Apex is the clearing agent and the custodian. And again, this presentation will be made available on the Aramir sites, and I'm sure Tom can email it out to everybody as well. And that's really all I have.
Hey Scott, do you have like a walkthrough of a typical trade?
Sure. Yes, we can absolutely do that. So let's take a look. Let's look at, here's the position at initiation, right? So in this case, we went with the longer dated debit spread. Okay, this is our longer dated call spread. This is when TLT was just under 121, 121.72. We put on a 123, 125 February call spread, right? So we bought 50 of the 123 calls and sold 50 of the 125 calls. And that's what because of its size and how it outweighs it and it's further dated, that's how it gives us that bailout here. Because as we go, its profit just outweighs those losses, which are now capped on the bear call spreads. So that's our longer dated debit spread. We sold a 120.50, 123.50, and I tend to use 3-point spreads on this. So we sold 20 contracts of the 120.50 to 123.50 call spread, and we sold 10 contracts of the 121.50 and the 118.50 put spread. And that gives us that starting delta before we scale in. Now you can see this initial was just 3,400 was the initial scale. And then the next we start to bring it up to the 5,800. It's a little blurry here, but as you can see, we start to just add to our contracts. Actually, this is a different position, so I take that back. We would just be adding to these, okay? Unlikely we have to add to the debit spread. We like to just hopefully open that and hold it for about a month. We open the debit spread about 45 days from expiration and hold it until about 7 to 15 days before expiration. So I like to sell a month's worth of short-term premium against that one debit spread. So as we go and as we scale in, I would likely be adding to these spreads or adding another, potentially adding another iron condor around the new money if we get a significant move. The key is to have liquidity all the time, because if we got a big move but to the upside, but it wasn't a blowout move, suddenly we're in the worst case scenario. I can simply just write a bull put spread at 122 or 121.50. And suddenly this will morph and the elephant's trunk will actually rise there. So as long as we have capital and time before expiration, we can make those types of adjustments.
Okay, I noticed the expiration line looks like it's completely above zero, but the T+0 line.
You can ignore that, and I can change that. So the isolation mode is wrong here. This is just taking that debit spread expiration because it's longer dated. So ignore that. When I do this trade live, this will be the accurate February 8th expiration, not the 15th, which is just for the debit spread.
Okay. And then Rainer asks, will Tradier accept non-resident aliens as customers?
So they do, yes. And they also take many international clients. So the international list is long, and they don't, for compliance purposes, won't allow me to publish it. So all you need to do is contact Tradier, and they're super responsive, especially from an email standpoint. So it's service@tradier.com. Let me just put it up here. Whoops. I don't have the email address, I don't think.
It's just service.
Okay, I don't have the email. Yeah, it's
service@tradier.
service@tradier.com. Yeah. So service@tradier.com. Or people can go to the website, tradier.com, and then go to the brokerage link along the top. And you just simply shoot them an email. They're well aware of the TLT Elephant promotion. You can tell them where you reside and see if they will open an account there.
And then to trade the TLT Elephant, I think you said, what, a $10,000 account minimum, or what would you recommend?
That's correct. So this offer from Tradier and TraderHawk requires a minimum of $10,000, which is fine because this trade requires $10,000 to do it. So you can trade it with $10,000, and you can scale it up as much as you like. I mean, TLT's liquidity is endless. we can, suddenly go into a contract that has zero open interest showing and write or buy 10,000 contracts and not move it, not move the mid. So the liquidity is just endless on TLT.
And then when you start the trade, it's what, 1 or 2 weeks out, something like that?
So yeah, I mean, with TLTs, this is a lot of people stay away from selling premium on lower IV underlyings, and for good reason, because commissions kill the trade. But when you eliminate the commissions, we can sell premium on a lower IV underlying, which we like. It's less stressful. It doesn't move as much. Now, when TLT it averages about 9.5 to 10 IV historically, implied, not realized. Its implied volatility is about, call it 10%, on average. If TLT's IV is below, the teens, is not in the teens, we're selling out 2 weeks. If something's going on and TLT IV rises into the teens, we can get away with selling out the iron condors 1 week. But most of the time, it's going to be selling out 2 weeks, scaling in, scaling out pretty much daily. And that initial debit spread with the initiation of the trade gets put on about 45 days to expiration.
Okay, and then I remember you said on a $10,000 account, you're doing roughly 1,000 contracts a month. Is that right?
That's correct.
Okay. And then Rainer asks, what's the profit, I guess, per thousand on a PMM on a $10,000 account? I guess profit per month probably is what he's asking.
Yeah, so we're targeting 5% biweekly on these trades when they're profitable, right? So, and managing them not to have big losers. So, on a monthly basis, our profit target I would say is, about 7%.
Okay, and then what kind of drawdowns do you typically see if you're having trouble with the trade?
Well, we don't typically see large drawdowns for the reasons that, in this environment, for the reasons that I explained earlier. If this was the 80s, it would be a whole different story. We wouldn't be running this trade because we'd be seeing TLT selling off as much as you could see it moving higher. But with no inflation and the Fed now transparent and on hold, we shouldn't see large drawdowns. Now, I mean, you never know in life. If we look at, let's go back to, a scaled inversion somewhat. That's not fully scaled, but pretty scaled. And you can see we're protected down to 119 without even adjusting anything. So $2, it's a big move. That's over 3 standard deviations, and we have tons of capital that we can adjust. So, I don't know. I don't know what a big drawdown would be, because my TLT trading in the past has been a little bit different than this trade. I'm rolling out this trade now because of the environment. In the past, I do a lot of other stuff that really wasn't something that could be, shown the way this trade is shown. It was just kind of more all over the place. This trade is far more structured, and we're allowed the opportunity to really get into it now because of the dynamics that I explained earlier.
So do you, no market stays the same forever. So is the plan with this to keep going as long as the current environment is like it is? And then
and it doesn't even have to be so long in the current environment. I've been doing this trade. So just to be clear, I've been doing this trade for the past 3 years, the TLT,
okay.
A variation of the TLT Elephant for the past 3 years, because we're in a situation, as long as inflation is in check, we're not going to have massive movements in the Treasury market. So that's the one driver, is inflation. Inflation drives the Fed. Inflation drives everything. So with this type of inflation, which we've had for the last 3 to 5 years, or before that there was none, but this 2% level, it's now neutral. We're at the neutral level for the Fed. This environment should last for the foreseeable future. Overall, the fact that we're not going to have rampant inflation, and we're going to have, treasuries that trade in ranges of 100 to 200 basis points over, 12 to 36 to 48 months. We can do this forever.
Tom Byron asked, do you have any performance data to show?
I don't have anything Aramir specific. I do have other items, but Tom, we haven't really discussed that. Me publishing where I've traded in the past.
Well, maybe do you have a feel for like win percentage, any kind of numbers that kind of a rough approximation of what you have been doing? Doesn't have to be exact.
I mean, last year I had this portion of my portfolio, and there's a service that I run to the half of it, but this portion of the portfolio did 46% last year. So that was a tougher environment. The upside was we had higher IV. The downside is it's much more difficult to control your gamma and delta late in the trade. So now, and all of that was driven by the notion that the Fed was going to go too far, right? I mean, this became an obsession in the Treasury market. Was the Fed is going to go too far, derail the economy, and therefore rates have to go lower. But the tug of war was the notion that the economy was solid, inflation was there, inflation was growing, so rates have to go higher. All that is now gone, right? Now it's just kind of status quo until it's not. So we'll see less movement, and that's why you see the IV. When Powell walked back his comments, IV on TLT was 14, which was extremely high, and now we sit at 9.5 again. This is where I expect it to bounce around for the foreseeable future.
And another question, is OV or OptionNet Explorer required?
No, it is not. Nope. I will do all of the modeling on one and post it. And I do it on a daily basis, where I essentially will post with my trade alerts. I post the one trade ticket, the one graph, which has the holdings, and the projected graph.
And then on a typical trading cycle, do you adjust these every day, every other day?
Yeah, it's usually there's going to be a trade a day, and I don't like to do adjust, right? When we adjust, that means I'm closing something that exists, which I'm loath to do, because that really just sends your models completely off the rails, right? Once you close something that you originally modeled, your underlying trade is completely different. So I don't like to adjust, I like to add. And that's what we do, is we look to scale in each day slowly. Until we get towards expiration, then we start to close those and scaling into the next biweekly cycle. But you can anticipate we are doing a scale in on a daily basis.
And then the trades, are they early in the day, late in the day, random times?
Typically it is between 11 a.m. and 3 p.m. That's when liquidity is highest for TLT. Unless something's going on, I'm sorry?
Eastern, yes. Okay.
Yes. 11 a.m., 3 p.m. Eastern.
And then usually just one trade per day, I assume?
Correct. It's typically one trade a day. And when I say one trade, it may be multiple spreads, right? So we may have, it could be one order, one iron condor, or I could be selling them separately, a put spread, a call spread, et cetera. But yeah, it's basically one spread order a day.
And then how critical is it, say somebody has a job and they get a trade alert, but they're in a meeting, how critical is it to get that fill like right away, or does it typically slow moving so you can, you're not going to get killed too much if it doesn't get filled?
Yeah, it's slow moving. A lot of times people will do a little bit better if they're in a meeting. Typically, it's pretty easy to fill within a couple cents of what I'm filling, better or worse. And the key with this trade is to get those trades on. We don't want to, we've got no commissions here. We're selling, $3 wide spreads and collecting, depending on where they're put, up to $1.50. So we don't want to sit here on a penny or two. If I got $1.50 and someone else is going to get $1.45 in credit, that's going to be fine. And that's the kind of thing you see for the spreads on a daily basis with TLT.
Right, makes sense. And then Rainer asked, what does the service consist of? I guess you kind of went over that. You're going to have the daily trades and then the images. And most of our experts do like a weekly recap video, and maybe in a case like Dan Harvey and I do a monthly Q&A webinar. You could do something similar if you have interest with
Yeah,
your
I'll do.
subscribers.
I can do. Yeah, I'll certainly do the weekly recap, and we can do webinars based on demand, certainly. But the weekly video recap I will do, which will go over the existing trade and the future trades or previously closed trades, that kind of thing.
And I've got a forum set up too for people who join in. Speaking of that, I know you had a slide with the cost, but there's you're going to have a 2-week free kind of charter tryout for people.
Correct. So here's the price.
There it is.
Yeah.
Yeah. So kind of like what Amy and Dan just did with their launch, it's going to be $99 a month for the first people to sign up. 50% off that the first time, and then $129 a month later on after the charter part ends. But before that, Scott's going to have a 2-week trial, so you can just join for free. It doesn't cost anything. You don't need a credit card. Just fill in your name and email. I think mobile number is optional, but we would use that for the trade alerts if you need it. But just go to that link and sign up, and take a look, because it doesn't cost anything, and see if it's for you.
Exactly, and you can pair that up with the free paper trading with TraderHawk, right? So you're getting a free trial here, and you get a free trial, on the platform as well, with no credit card and no obligation and no brokerage account, which is you're not going to get that anywhere else. So you could have this free trial, and you could paper trade it with TraderHawk, and have that 2 weeks for completely free with no obligation.
Sounds great. I don't see any other questions. Like I said, I do have a forum set up, so Scott can answer your questions in the forum. And yeah, just give it a try. It doesn't cost anything, and the results are pretty good. 46% last year. Most other option strategies would be really, really happy to hit 46% or even half of that. So can't argue with success. And any last things you want to say, Scott, before we wrap it up?
Well, that's it. Thanks for the time, and hopefully we'll see you in that chat room, and we'll work to make some money together here.
Yeah, absolutely. And then if you send me the slides, I'll post it with the recording, and then people can take a look at them at their own leisure.
Sounds good.
All right. Thanks, everyone, and
all right, thank
hope
you.
you sign up. Yeah, we'll see you later. Thanks, Scott.
All right, take care, guys.